Eddie. Welcome back to the Metaverse. Before you head out to Hong Kong FinTech Week, would you like to warm up with a game of table tennis? Your challenge is to consecutively hit 6 floating targets. Nice shot, Eddie. Congrats on leveling up. It's time to get dressed. Shall we try out some outfits from the Avatar store? These wings will definitely make your entrance extravagant. This spacesuit is cool, but people won't see your face. You look best in your trusted suit. Hold on tight, Eddie. We're teleporting to the venue to meet everyone.
Good morning, everyone. Welcome to the Hong Kong FinTech Week. It's a very exciting and important week for Hong Kong. For the first time in 3 years, we're welcoming many of our overseas friends to come back to Hong Kong for the FinTech Week and also the Global Financial Leaders Investment Summit and then the Rugby Sevens after that. And that marks the beginning of our path to normality, and all visitors should see and feel the vibrancy and the dynamism of our city. And part of this dynamism comes from the fast-growing fintech ecosystem in Hong Kong. Innovative fintech firms are exploring ways to drive the momentum towards an even more tech-enabled financial industry. Many are looking at how to make use of the various blockchain protocols in order to create products or services through crypto, stablecoin, DeFi, NFT, or the metaverse. As you can see from the booths outside, some financial institutions are already using some elements of the metaverse for brand building and customer education. And it will be great to see whether in future and whether to what extent the metaverse can form a new landscape for real-world financial activities one day. And I hope that the opening that you just saw illustrates how the metaverse can mirror or even improve on reality. For example, what you see on screen just now, my avatar definitely looks younger and cooler than real me, and he definitely plays better ping pong than the real me. 3 years ago at the same event, I said that technology adoption will be a very bumpy road. And of course, no one could have guessed how bumpy that road will be. But for Hong Kong, the whole journey has been rewarding and fascinating. Our fintech journey started in 2016 with the Smart Banking Initiative launched in 2017, and then we rolled out our FinTech 2025 strategy just last year. But in between, we have introduced a faster payment system now with 11 million registrations and more than 1 million transactions every day. And we've also got 8 virtual banks now with 1.7 million accounts and also 25 billion Hong Kong dollars in deposits. And they're all delivering innovative and inclusive products entirely through digital channels. And last week, we launched the Commercial Data Interchange, or CDR as we call it. And that makes financial data sharing between banks and data providers a lot more efficient so that borrowers, especially the SMEs, they can make use of their own data, things like their payment data or the B2B e-commerce data, so that they can gain better access to bank loans. And we are also one of the few central banking institutions that are piloting and experimenting with both wholesale and retail central bank digital currencies, or CBDCs. So if you ask me whether I anticipated all these developments when we first organized the FinTech Week back 2016, the answer is definitely no. Technology has been developing incredibly fast in the past few years. And in fact, digitalization of financial services has been accelerated and not impeded by the pandemic. The momentum of our FinTech journey is only getting stronger. And we will continue on this path of FinTech innovation. And to help us to navigate this long, winding, maybe foggy road, we need to take a pause at this point and look back and ask ourselves what we did well, what we could have done better, and how we can do things better in the future. And today I would like to take this opportunity to share 3 reflections with you. And I won't pretend that these are in any way definitive, but these, I believe, are the takeaways of our journey so far. The first reflection is the need for radical open-mindedness, a term that I borrowed from Ray Dalio, who used that to describe the idea generation in investment. But I would argue that this is even more applicable for fintech innovation. We need to be radically open-minded to new ideas and try things that could make the financial system better. When we brainstorm ideas for new fintech projects, we usually won't know where that will lead us. The only sure thing that we know is that if you don't try, you're not going to get anywhere. And the key is to learn from failure and move on. This very open mindset, has gotten us a hugely popular faster payment system, 8 virtual banks, and a vastly more advanced data sharing infrastructure in our financial system. In the beginning, we were sometimes a bit hesitant or even resistant, wondering how new creatures like crypto, stablecoins, DeFi, or other blockchain-based innovations can fit into the mainstream finance. In fact, no one can say that they were sure how these innovations would shape the things to come. And some of us, understandably, were just hoping that, hey, just go away and let's get back to business as usual. And financial markets don't really like surprises. And the idea that disruption is a good thing is a bit unfamiliar to many. But over time, it has become very apparent that these innovations, in particular the technologies and the business innovations underpinning them, will be here to stay. And they will naturally develop very nicely in a healthy financial system like Hong Kong. They have the potential to improve efficiencies, reduce intermediary costs, and also promote innovation. Digital innovations encompass a wide spectrum of products and services well beyond the commonly known cryptocurrencies. DeFi, given the composability feature, can inspire a lot of innovation in finance. Take tokenized green bond as an example. We concept tested the idea with the BIS Innovation Hub last year, and we're actually adopting it for an actual issuance later this year. Think about it. When bond and cash are all tokenized and can be brought on-chain, all the bond life cycle events like asset servicing, trading, redemption, they can all happen more efficiently in a distributed and transparent manner. And that could even make possible real-time tracking of the green impact of the tokenized bond. But in addition to traditional financial assets, blockchain technology can also allow fractionalization of asset ownership, whether you're talking about art, real estate, or other assets. And that will create a new form of financial intermediation. And with radical open-mindedness, we can use technological innovation to make financial markets more complete and bring benefits for the real world. Now, wearing my hat as a regulator, a radically open mind does not mean that financial stability will fall by the wayside. The use of digital innovation needs to be complemented by a clear approach to money laundering, financial, and other risks. We continuously work with banks to achieve this. We also ensure that consumers and investors, they understand the risks associated with investment in these still largely unregulated products. To do this, we need to put in place the right guardrails. And the basic principle is very simple. Same activity, same risk, same regulation, so that digital assets performing similar functions to traditional products should be subject to similar regulations. And that is exactly what we and other regulators in Hong Kong are doing. The HKMA is putting in place a risk-based and proportionate regulatory regime for payment-related stablecoins. The SFC is introducing a framework to regulate digital asset trading platform. We have also issued guidance to banks on what they need to watch out for if they wish to offer crypto or DeFi-related services or products, whether it's account opening or custodial services. And these guardrails will, in fact, provide a solid foundation with a clear set of rules on which a vibrant crypto and DeFi ecosystem can be built and developed in Hong Kong. So whether I'm wearing my hat as market enabler or as a regulator, there is a need to be radically open-minded, basically to have a welcoming attitude to new ideas so that we can achieve public good through a fair balance between innovation and stability. My second reflection is more is more. We may be a lot more familiar with less is more, which is the mantra for designing good, friendly user interface or cool technology products. But new platforms in retail payments, data infrastructure, or cross-border payment platform, they tend to be more successful and more sustainable when they can achieve widespread adoption, which will lead to strong network effect. Just think about the faster payment system that you use every day. Will you still use it every day if your friends and family were not also on the platform? No. So from the design stage, we aim to include more currencies and payment institutions so that we can attract a very rapid build-up of users. And the result is the world's first multi-currency instant payment system connecting not just banks, but also e-wallets with customers. And with that strong network effect, FPS adoption in Hong Kong is probably one of the fastest in the world. And we are strengthening this network effect further by introducing FPS payment for merchants and government bills. Or think about why we launched CDI, the commercial data interchange that I just mentioned. As you know, data is an essential nutrient to digital development. Currently, commercial data is scattered across different isolated data islands built bilaterally by banks and individual data providers. The idea of CDI is to provide a common data infrastructure that can replace these compartmentalized one-to-one spaghetti-like connections into an efficient many-to-many connection with an interface with a platform in between. Banks will have common access to a sea of data, which will allow them to compete on innovation in service delivery. And for this to happen, we need scale. We need to connect as many data providers, data consumers, and also data owners as possible in order to create this network effect. The same goes with mBridge, the cross-border payment project that recently completed a number of rounds of pilots. For the platform to be sustainable, it is important for as many banks and their clients as possible to use it. The more, the better. It is similarly important to include as many currencies and jurisdictions as possible. This is a virtuous cycle. The larger the network, the more the users, which in turn will further expand the network. So again, more is more. And my third reflection is that the key to success is beyond tech. It is not beyond tech, the vaccine that we're taking. Here I am referring to the need to go well beyond technology to create network effect. Projects that fill a glaring gap in available services, like in the case of FPS, it may achieve quick adoption more easily because you need the service. But for other projects that seek to replace current products or practices, adoption could be an issue even if the new product or experience is superior to what we have currently because of inertia. Let me illustrate this using our CDI initiative. The technology to construct the infrastructure and connect all parties is relatively simple. But creating a conducive environment to attract all stakeholders to join is a lot more challenging. The project team, in fact, spent most of their time not on the technology part, but in creating a commercially viable arrangement to ensure that there's something for everyone. The banks can use data to manage their credit risk, the data providers can earn fees, and data owners can borrow more easily and cheaply. So the key to success to CDI clearly lies beyond technology. We need to find the right commercial incentive for all to benefit so that we can create the network effect. And similarly, for the Enbridge project, technical interoperability is key, but it's relatively straightforward. The platform already has the flexibility to allow central banks to easily connect, whether it's through CBDC or even traditional payment system like RTGS or FPS. But in itself, that won't attract more jurisdictions to join. In order for them to join, the platform needs to account for policy and business challenges. Things like how to build in different regulatory requirements like anti-money laundering, how to ensure sufficient on-chain foreign exchange liquidity, or how to develop a shared legal framework. These are all challenging but necessary tasks. The project team will focus on these issues, which are well beyond technology, in order to take the project to the next stage. The HKMA began our FinTech journey 6 years ago. By now, we have come a long way, reached some important milestones, kept pace with our peers, and are now pressing on to uncharted territory. But like everyone else, we are still exploring, experimenting, and learning. And as we continue our journey, we will stay radically open-minded, learn from our failures and keep trying, and go well beyond technology to create a network effect. And as I said at the beginning, Hong Kong will continue on the road of FinTech adoption. Many exciting developments are taking place, and you're bound to see interesting sites and meet interesting people along the way. So I invite you all to come to Hong Kong, experience our vibrant ecosystem firsthand, put your most innovative ideas and best technology here, and take advantage of the many business opportunities. I promise that the journey will be above and beyond rewarding. Thank you very much.